Okay. All right, so here's the actual disclaimer.
Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither PhilStockWorld.com, PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any loss you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone.
All right, fantastic. No, I like the faster one better on the other system, so I think I might stick with that. But still, it's all interesting to see how these different things work. So let's see. Where was I? Oh, yes. Futures. All right, we have two good trade setups in the futures, and neither one is paying off so far, so we're in good shape. I like, I already put them in, actually. I like this short on the S&P up here. I think 3260 is kind of tough to cross, and I think this is a little bit of an irrationally exuberant rally at the moment because we're not done with Iran yet. Just because, I mean, really, just because they said, "Oh no, we're not going to attack anymore." I mean, that doesn't mean they're not going to attack anymore. It just means they said that. But you know, they know that Donald Trump is a guy who can be fooled by something like that. So that's what they did. They go, "Oh, we're not going to attack anymore," and Trump goes, "Oh, good, they're not going to attack anymore. We're fine." So what I like here is I like the long on gasoline, and I went long just about 165, 1649. It dropped below 165. I should have picked up another one by now. Oh wait, here's my chance. So a little bit lower, and oh wow. Be careful what you wish for. All right. So right here, if I can get it, the question is it going to fill? Because when it jumps around like that, sometimes it's hard to get a fill. Oh wow, look at it flying up there. Oh, there you go. And then it fills. This is why, by the way, you don't chase these things. You just put in the price you want to offer, and if you get it, you get it. And if you don't get it, you don't get it. Don't chase futures. So this is a gasoline RB futures. They just had a tremendous build in gasoline. It sold off quite a lot. We were at 170 before the report this morning. We were at 170. Now we're at 165. So that's a nickel drop in a day. That's a pretty big move for gasoline. And I like it to recover. I mean, frankly, you know, it's most likely, and we're going to check the report now, but it's most likely just an aberration. And next week it'll even out a bit. So for a week, I'm willing to carry it and see how it goes. But of course, whenever I say that, if you make a quick $1,000, take it off the table. I mean, it's not, you know, you're not looking for tons of money. Oh, and here's the S&P that I said we should short, so that's already doing okay. So we're going to keep an eye on these things. I mean, you could short anything. You could short any of the futures. We have the Russell over here. We have the NASDAQ, the Dow. But I mean, I think the NASDAQ's a good short up here too at 40. Why can't I see these? What is the matter? Buy, we don't need that. We don't need volume at all. Let's see if we can make the buy smaller and the sell, and then we can move the air. There we go. Now we can see what we're doing. Okay, so at 40, I like short in the Nasdaq, but I don't really. I mean, I'm not looking to chase it because I already have the S&P short. You know, that's the thing with the futures. You want to pick something. Don't just go flying all over the place. But you know, for the sake of demonstration, if we can get to 40, I'll certainly short this again because that's been real tough for them to stay over. And the Russell, again, I'd rather be at 1670. And then let's take a look at the Dow, which is YM. And see how they're also flatlining up here. So, you know, it got jammed up. And now it's sort of flatlining here. And that means that there's what that means when you see this on a chart, you have to imagine that they ran into sellers, right? There's a program here that starts buying, didn't have any resistance. There weren't too many sellers, but then all of a sudden here, tons of sellers. Obviously, selling, selling, selling. Now, who's going to get tired first is really what you're looking for. So, which are the buyers going to get tired first or the sellers going to get tired first? And obviously, if I think sentiment is overdone, then I should be betting on the buyers to get tired first. So there's going to be more people willing to sell at this price than there are people willing to buy at this price. So that's what makes the bet. Oh, right on this line. Let's take it. Let's take that one. That's the Dow. See, it's interesting. It won't fill. Thinkorswim is funny like that. It's not filling because I'm not getting my price. I'll take that. Now I have two out there. So now I want to erase this one if I can. So I'm going to move that lower. Nope. Not helping. I'm going to move it even lower. I'm trying to get rid of it. Up, now I got one, so I kill it. There you go. So now I'm in at 2874. So, oh, I see what happened. I got a bad fill. Oh, that's shitty. When I moved it lower, it took my lower one and didn't take my higher one. That was very unfair. Anyway, so now I have a bad fill, so I'm upset about that. And I'm down at 40. And we have to just wait and see if it catches up with us. That's all. But hopefully we can turn a profit over there. This one's doing okay. It's picking up a little bit. And gasoline is still languishing, so I definitely want to. I've already got two, though, so I don't really want to go crazy on gasoline because I might go even lower tomorrow. See, gasoline I'm willing to hold to next week's inventory. Obviously the Dow and the Dow short and the S&P short. If you make money, get the hell out and be happy. Okay, because it's just really just too freaking crazy to like leave these things overnight because God knows what happens. It's scary enough having them intraday. All right. Let's see if there's any questions while I'm doing this. Nope. Okay, nobody has questions about that. So overall charts, Tesla. I was looking at Tesla. That's not the way I like to set it up, though. Look at this. This is freaking insane. I mean, we'll talk about that in a minute. YM is the Dow, and ES is the S&P. And then we have the Nasdaq and the Russell. Very nice. Oil, Brent, gasoline, natural gas. That makes sense. There's the dollar, except it's not working for some reason. Why won't this work? The dollar you can't show me? YG is gold. What? What is going on here? SI is silver. Well, it agrees with me on silver. Doesn't know what gold is for some reason. That's interesting. I don't know why it's having problems. Let's try this again. All right, let's try GC. Okay, it likes GC, so we'll use that. There's gold futures, there's silver futures. Well, if you don't want to do the dollar, let's do HG is copper. Has no problem with that. Oh. Dollar. DG. No, not Dollar General. DX, US dollar index futures. We can't find the symbol. Huh. Very strange. Anywho, well, so we can watch Tesla and see what it's doing. Silly thing. Okay. But I don't want to, oops. I don't want to focus on Tesla yet. What I want to do is I want to find the petroleum status report. And let's see what the hell's going on. The headlines are, make sure we got the right one. Week ending January 3rd. I guess that's the right one, because today's the 8th. So, now this is interesting. U.S. crude imports average 6.7 million barrels a day, up by 378,000 barrels. So that's interesting. That means that 2 million barrels were caused by an increase in imports. We'll see how much of that is in that. Distillate imports. U.S. commercial oil inventories increased by 1.2 million barrels from the previous week. That's obviously because they imported more. Total motor gasoline inventories, this is disastrous. So gasoline inventories up by 9 million barrels, and we're 5% above the 5-year average for this time. So basically, there's too much gasoline in storage. There's 5% more than normal in storage. And we just added 9 million barrels. Now, by the way, when you see numbers like this, it doesn't mean anything as a number by itself, but out of what is always the question. So you got to go down to here and say, well, how much gasoline is in storage? This makes it even worse. We only have 250 million barrels in storage. That means 9 million barrels is a very significant amount of barrels. Okay, if it's 9 out of 1.9 billion, that's not as big of a deal, right? But when it's 9 out of 250 million, that becomes obviously a huge deal. It's like, 3% or whatever. About 3 to 4%. So that's a huge, huge change, and we're already 5% above the 5-year average. That's how you know it's bad, when you hear something like that. Now, distillates, on the other hand, they increased by 5 million barrels. That's even bigger. Distillates are only 139 million barrels, and they increased 5 million barrels. So it's basically the same percentage, I think. Here, let's get Mr. Calculator involved. So you got to look at the impact of something, not just the number. It doesn't mean anything by itself. Divided by 133, it was before this increase. That's 4%, right? And what do we say? 9.1 divided by, before the increase, 242. 242 is 3.7%. So basically, closer to 4% on both of them. The oil barely moved. The oil, because we have 650 million barrels of, we have 429 million barrels of oil. It only went up 1.2. That's the least of your problems. These are your big problems here. That is just crazy. Now, we always look at all other oils to see if that had any impact. It did not. It's 461 and 460, so nothing going on there. And overall, you can see we went from 1902 to 1916. So it's a very, very large build. That is not what you want to see if you are an oil bull. Finviz. Right. Oops. FINVIZ. Oh, that's not the one I wanted. I want the futures. Futures. So I guess I gotta go do this. Everything's messed up because I went on vacation and shut my computer off, so now it's all, I don't have any of my pages. Futures. Energy. Wow, whoa. That's not good. Actually, it's really not good because, well, no, we're okay because this is holding up. But that's a hell of a pullback. Wow, look at that. That is nasty. $5 down today. I don't know. It doesn't look like it, but well, in a couple of days. Look at that. That's horrible. Now, 60 is probably going to hold up on oil in the end, so that's an interesting long. But I'm happy with our gasoline long, even though it's not a little lower than I thought. But gasoline, I think, is going to come back to the trend. But again, let's get back to now. Let's see what we're looking at here. So, what really changed? Nothing. Obviously, nothing changed in refinery activity. 16.8, 16.9. That's very close. Percentages are close, 10 and 9.8. So gasoline production was down a bit. Now, that's significant though. Gasoline production was down 200,000 barrels a day, so 1.4 million, yet you still had a build in gasoline of 9.1 billion. So of 9.1 million. So they produced less gasoline, yet still more gasoline is piling up. That's probably why they stopped producing it. They're like, we can't, the refinery's got to be like, we can't fit any more gasoline in our inventory. This is crazy. It's not, no one's buying it. So why is nobody buying it? That's the question. Oil imports are very similar, not a big deal. Petroleum exports, refined exports are about the same. And although exports are down from last year we were exporting more. And that's that. Okay. Products supplied. We supplied less gasoline, which we saw over here. We supplied a bit less distillates, and that's the problem. Nobody wants them, so we're not supplying them. That's all. All other products, basically, all other products ramped up. We're supplying more all other products for whatever reason, which is a decent amount. But the total is really not much change. So what's the big difference here? Well, first of all, look how much more money we're charging than last year. Demand is the same as last year, yet we're charging much more money. That makes no sense, right? That's not really logical. Gasoline, not terribly much more, about 15% higher than it was. But still, the problem is timing-wise, you're into the post-holiday weekend. And of course, gas stations are gonna fill up, they're gonna order their tanks to be full. Excuse me. My sleep schedule is still screwed up from Thailand. The gas stations are going to, before the holiday, especially Christmas time, because especially in like the Northeast and stuff, and wherever it snows in the North, they're going to order their tanks to be topped off, because what if it snows and they can't get more gas when they run out? So in the wintertime, they always tend to front load their tanks rather than play it close to the vest, because just in case there's demand, because no gas station wants to be out of gas. So sometimes when it snows a lot, the tankers get backed up, they can't get to all the gas stations, and you run out of gas, and you just have to be like closed. And that really gets people pissed off in the community, because they can't, if it snows bad, they can't really travel far to get gas. So they don't like it if you're their local gas station and you ran out. They just think that's poor planning on your part. So anyway, so before the holiday, there was an uptick in demand, although it wasn't even that strong, but there was people logically are topping off their tanks at the gas stations. And then after the holiday, if not that many people ended up traveling, and this has happened pretty much every holiday for the last year, we've been seeing this, that the holiday sales have disappointed. Holiday gasoline sales have disappointed. Why is that the case? First of all, it's because in day-to-day traffic, in day-to-day usage, you're making short commuter trips. There's not a huge amount of gas being used up. So in a regular weekend, the difference between an electric car going to an office and a gasoline powered car going to an office is going to be like a gallon. You know, not even a gallon of gas per car. Still, there's tons of cars on the road, but whatever. It's going to be a small amount. And the impact of the electric vehicles is lowered, right? But in the on a long weekend, not only the electric car, but the fuel efficiency starts to really add up as you're making thousands of miles of trips. And what does a family do? If you're going on a long trip, you know, and again, we are the investing class. We have money. So you have to think like people who don't have money. Think like you thought when you were in college, assuming you didn't have money in college. I sure didn't. So in college, you know, we used to make decisions like whose car gets the best mileage before we take the trip. People make those decisions. That's the kind of decisions that middle class people and below middle class people make. They say, oh, I have two cars. One gets 20 miles a gallon, one gets 35 miles a gallon, and we have to go 1,000 miles on a trip. Well, damn straight, they're going to take the car that gets 35 miles a gallon. Okay, I take the car that has I take the car that's coolest for the trip. If I'm going somewhere warm, I take the convertible. If I'm going somewhere cold, I take the SUV. But that's because I have choices. You know, it's the cost of the gas, whether it's $50 or $30, isn't part of my decision-making process. But many people make those choices, and the higher gasoline is, the more likely they are to choose the more fuel efficient vehicles when they when they go to get something. And that's what you see. That's why it's kind of magnified at the holidays, and that's why you see this slippage of demand. And I have been saying forever that you're going to get, over the next 10 years, you're going to get this constant erosion as the fleet of cars turns over from an average vehicles of 20 miles a gallon. Oh, here, let's do this. I will illustrate with a chart. Cafe standards, and we'll see if we can get a good chart of this. Images. Yeah, that's a good chart. Okay, look what's happening. You know, for here we are now. In the last 10 years, fuel standards have gone like this, right? But you don't see a lot of change. Here's from 2010. So 2010 to 2020, these are the standards. But standards don't immediately impact. In other words, a car, well, where's the car? Well, yeah, let's look at cars and I guess, well, light trucks is, I don't know if an SUV is a light truck, but let's use this number anyway. So in 2010, it was 25 miles a gallon. Now in 2020, it's closer to 40 miles a gallon. That is your economy standard for the fleet. There must be a more accurate one than this, so I don't like these dots. 20. What's this one say? There you go. That's nice. So this is from 2018. Okay, so here we were in 2010 at 28 miles a gallon or whatever. Here we are now at 34 miles a gallon. Okay, but the standards roll up, and you're talking about 45 miles a gallon. That means this car, the average car here, uses half as much gas as it did here. So in 15 years. So, but the thing is, that's 5 years from now. Now, the thing is also, though, that so what if you increase from 28 to 34? Because during this time, first of all, we have the crash. All this time, nobody was really buying cars. That diluted the impact. Okay, people were keeping their old cars. That means this mileage was prevailing, even though the standards were up here. If no one's buying the new cars with the new standards, what's the difference? Okay, so then since 2016, really 15, 16, let's say, people started buying cars. That's what's key. All the cars have the new standards. That starts bringing the average up. Now, people are buying cars at a fairly normal pace now, boom, 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 boom. And so there's a lag, though. There's a huge lag, because how long do people have cars? Let's say 5 years, okay? So that means every year only 20% of the fleet rolls over. So even if you raise the standards from 34 to 44 in 5 years, you won't see the full impact of this for another 5 years until everybody gets new cars, or the majority of people get new cars. So that's what the factor is now. What we're seeing now is the impact of these improving standards. Every time someone gets a new car, it's going to be here. That's where new cars are. Okay, and yes, some are higher, some are lower, but the bottom line is that's what a CAFE standard is. The average of the fleet that goes out has to hit this mark. That's the federal regulation. So that means that every time someone gets a new car, it's going to get at least, as a generic person, 34 miles a gallon. Whereas any car they traded in from 5 years ago only got 30 miles a gallon at best. Okay, and if they have an older car, obviously worse. So 10% less fuel is being used every time someone buys a new car. How many people buy a new car? 20% of the population buy a new car in a year. Therefore, 2% decrease in fuel usage. Got it? So it's 10% better fuel economy times 20% of the people buying cars with the 10% better fuel economy gives you a 2% increase in fuel economy. Therefore, 2% less gasoline demanded in the year 2020. Now, it's a cumulative impact that gets more and more and more and more each year. And here, this is very far. This is 10 over. This is more than 20% higher. It's like 30% higher in the next 5 years. So what does that mean? That means every year going forward now, 20% of the people are going to get a 30% increase in fuel economy, except it's rolling over time. So let's call it 15%. So now going forward, we're going to be increasing by more like 3% a year. And by the time we get to 2025, we will be increasing at 4% a year. That's every year using 3% less. So 5 years from now, we'll use 15% less fuel than we're using today. And then after that, the next 5 years, it's times 4%, so it'll be 20%. So overall, by 2030, we'll be using about 25% less fuel than we were using in 2015. I'm sorry, in 2020. Now. Millions and millions of less gallons of gasoline. Now, what would offset that? Well, what's going to offset that? You'd have to have massive population growth. We not only don't have that, but we're kicking all the immigrants out, so now there's even less people to use gas. So we have very little population growth. We don't have a massively expanding economy, and even if we did, our economy isn't really driven by many things that use oil. And the impact of this can get much, much worse for the oil industry if we switch to more and more electric cars, or if people start using other means of transportation, like scooters and things, which is, and by the way, there's scooters are great. The stand-up scooters are fantastic. I see people in California using them everywhere to go all over the place. The thing about the scooters is a huge lobby against them. And, and the lobby is, of course, the gasoline industry is basically, and the auto industry is completely against it, because it's such a simple solution to traffic. I mean, if you just the problem is sharing the road with a car. Is the accidents caused by scooters aren't caused by much except for hitting a car. And you know, it's a scooter. It's not that, you know, they only go like 10 miles an hour, 15 miles an hour tops. It's not like it's going incredibly fast. It's you're only inches off the ground, and it's really easy to balance on. So it's a matter of if they got the cars out of the streets and just let people have scooters, it would be fantastic. And but instead, the cities get lobbied really hard. In fact, I'm in Delray Beach, Florida, and there were literally lobbyists at the mayor's office, and they were pushing that don't even allow the concept of scooters. Fort Lauderdale allowed it. They lost in Fort Lauderdale. They lost in Miami, and it was amazing how fast it got adopted. So in Delray Beach, they decided they were going to hold the line and not allow this madness to continue, because God forbid people start, you know, just hopping on a scooter when they want to go somewhere instead of like sitting in traffic for 2 hours. So, and I don't know, if you don't live in a scooter city, it's funny because it's like you literally, there's scooters wherever you get out. If you get off the scooter, it should be more regulated as far as like parking it. There should be places to put them, because it's kind of annoying. It's a little annoying because it's like litter. But people basically, you get off your scooter and you leave it wherever you get off. So you get to a store, you get off, and you put the scooter in front of the store. It's no longer your scooter. You left it. And now the next person comes along with their phone and presses a button, and you scan the scooter with your phone, and then it's your scooter. And then you drive it until you're done, and you get a little charge on your phone, and that's it, and you're done. What happens at the end of the day is to discharge scooters. People with trucks come around, pick up the scooters, and with GPSs and whatever, and they take them somewhere and charge them, and then the next morning they put them back out on the street. But they put them back out on the street according to the scooter company says these are the locations we need to have scooters, and so they redistribute them. So in the morning, and of course the thing gets smarter all the time. They keep analyzing like where the people need scooters and where the people leave scooters. So they analyze the flow. But in other words, it's really an interesting economy, because if you think about it, the scooters are essentially where they need to be in the morning, and then people take the scooters wherever they need to go. They will then, some people take the scooters home again, so they go back out anyway to where they were. But people take the scooters in. I really have never in California had to go more than like a few blocks without finding a scooter to be able to use. They are everywhere. And you just get on the scooter and go to where you're going and get off the scooter and you're done. You don't have to give it a second thought. That's freaking transportation. It's everything Segway said that they would be, except this works. Because it's half, it's not even half the size. It's like a third of the size of a Segway. It's just a board with a stick on it. And you just go where you need to go. You get off and you're done. And it makes no noise. It has no, it has no pollution. It runs on electricity. It really is great. And I wish there was a scooter lobby that was going the other way and pushing for people to use scooters and to have, scooter lanes, or to do something to make it more attractive as an alternative. Because it's the most sensible possible solution for cities. It really is. You just take a scooter, and when you get to where you're going, you put the scooter down, not down on the floor, but I mean, people, they stand up by themselves, but you stand them up. Now, somebody's coming up with self-driving scooters. So if the self-driving scooter means you get off the scooter and the scooter's going to go park itself, that's going to change the ball game, I think. So I think once the scooters can park themselves and charge themselves, I think that because it's a big cost for the scooter company that people go pick them up. I think that's going to solve a lot of problems, and that'll open it up in more cities. But again, and I was in Bangkok, and I'd say 2/3, possibly 3/4 of the vehicles there are traditional scooters, the two-wheel, semi-motorcycle kind of scooters. That's what most people drive. And it's funny because you're in a taxi and you're just like surrounded by dozens of scooters, like you're the idiot in the car. And that's fantastic though. That's how people get around the city. And believe me, you feel like the idiot in the car when you're standing in traffic and people in scooters just sort of weaving in and out and going past you. And China, I mean, you see it also in China, but they also have bikes. And then there's electric bikes too. That's another way people can get around is by electric bikes. But the thing about electric bikes is they're big and nobody really rents them. They're starting to in California, but nobody really rents them. They're kind of yours. So if then you have to deal with parking it and tying it up and worrying about it being stolen and so on and so forth. Scooter has none of that. A scooter is literally, you walk out the door of where you are, you look around, you grab a scooter, and you get on it and go where you want to go. At a speed that's generally faster than most of the cars are moving in a big city. So that's another thing that can really, totally accelerate this thing, because people are just going to stop using gasoline altogether. They're going to just say, well, we don't need that anymore. And obviously there's times you need a car, but those times are pretty limited. I'm in Delray, where I am now. I can walk to so much stuff that I only use my car like once or twice a week. I mean, I guess I'm a typical old person in Florida that doesn't use their car much, but it really isn't necessary. And if I had a scooter, if scooters were allowed in my town, I would never use my car. Unless I'm doing something like today, I'm going to the airport to go pick up my daughter, which frankly she could get an Uber, but I'm being nice and I miss her, so I'm going to go pick her up. Anywho, where were we? Oh yeah, so fuel, gasoline, so on and so forth. So many factors here are causing this, but nothing particularly other than what I think is a holiday issue. I think this particular week, I think the building gasoline is being caused by a lot of demand for the holiday, plus also in Christmas and New Year's, you probably had less export activity. I've pointed this out all year long that, where's that thing? We're exporting 3 million barrels of gasoline and distillates a day. That's ridiculous. That's 21 million barrels a week. The United States' daily use of oil is 20 million barrels, 21 million barrels. So one entire day of the US's quote demand for oil is really just stuff we export. So when you hear about demand in the US and gasoline consumption, you have to consider we're not really consuming that much. And it's not taken into account. I've gone over this with so many people. I pointed this out to reporters all the time when I'm interviewed, and it's amazing how they've never heard of this before. That they go, whoa, and they're like, that can't be right. They get back to me and they're like, oh yeah, you're right, that's true. Because it's true. The statistics that you see when you look at demand for US oil demand, consumption, and they try to tell you that energy consumption is steady in the US and it's not going down and blah, blah, blah. It's bullshit, because we never used to export 3 million barrels of oil a day. 5 years ago, if we exported 1 million barrels a day, that was a lot. 3 million barrels a day is an entire day of our consumption. So the offset of our lowered consumption is this incredibly increased amount of exports. But we've hit a bit of a wall there, because now other countries are also moving to more fuel efficiency and so on and so forth. So in fact, we're lagging way behind Europe. I don't know if that's going to say, I don't know if you can do CAFE standards Europe, because I don't think they call it that. Where is this? Up. There we go. CAFE standards Europe. Oh, okay, good. US. Europe. What are we looking at here? Okay, yeah. So there's the EU, there's Japan. This is 2015. We're here. So we are only now at 38. They are at, God knows, well, let's see. They're at, Japan is at 55. So if you're an auto dealer in Japan, your cars have to average 55 miles a gallon. In the EU, 65 miles a gallon. And that's why when the US automakers say we can't make those standards, we can't meet those standards, it's bullshit, because they're selling their cars in Europe and Japan now exceeding those standards by a mile that they say they have to meet in the US. You have to understand the level of bullshit that's being told to you when they say things like that, because they're making these cars in other countries that hit these standards. We are the only idiots accepting this. And what does this do? This is costing you, you're a US consumer, this is costing you 20% more on gasoline than a Chinese driver, 30% more than a Japanese driver, 50% more. No, 100, no, well, let's see. Yeah, it's 100% more. It's a big number. It's 100% more than a European driver pays for gasoline. That is what lobbying costs you. That is what this is the thing. We don't lobby. This is a problem with consumers, is we don't get together and lobby. Even though we have trillions of dollars to spend, we spend none of it lobbying to save ourselves money, while the people we're giving out trillions of dollars to take billions of dollars and put it into lobbying so that we will pay more money. That's stupid. We are very stupid people. And you know why we're stupid people? Because when you talk about something like that, people say you're socialist or you're communist or you're anti-capitalist. It's brainwashed into you that you shouldn't do things like this, that you shouldn't organize, because organizing people is bad. Organizing labor is bad. Organizing citizens is bad. That's all commie stuff that real Americans don't do, right? That's because real Americans are the suckers of the world. And we are that way because we are brainwashed to be that way. Because you're told over and over again. Since the McCarthy hearings, you've been told. Since the 1950s, you have been told that it is wrong to care about yourself as a consumer. It is wrong to care about yourself as a worker. It is wrong to be concerned about the rights of others. These are not American things. We don't do that here. Okay, it's been brainwashed into you. It's completely wrong. It's an idiotic stance. But that's what happens when you're in an oligopoly, which is what we're in. An oligopoly is a government controlled by corporations. That's what we have here. We have a government controlled by corporations that strips citizens of its rights and gives more and more rights to corporations and makes them immune from punishment. The fact that Carlos Ghosn is in freaking, where is he? Libya now, I think. Who cares where he's? Lebanon, Libya, wherever he is. That he got to run away from Japan because he's so rich he can afford to have his own private little SEAL Team 6 extract him from jail. So he's broken out of jail in Japan, smuggled out of the country, and goes to a country that won't extradite to Japan. And then he's got the balls not to hide. Like Julian Assange is not rich, so he has to hide and be quiet. Carlos Ghosn calls a freaking press conference and starts yelling at Japan. And yelling at the company that he got in trouble at Nissan, where he got in trouble for bribery, for the way he became a billionaire was illegal. He took bribes. He did illegal things. He moved money around in bad ways. He did a lot of things that were terrible to hurt average people. Doesn't matter, because he's now rich. So now that he's rich, he gets to do all those things, just like Trump. Same kind of thing. All right, it's like what Trump said, when you're rich, you can do whatever you want with women. That's exactly what it is. It's the same attitude all the way across. Okay, being rich exempts you from standard law. You just really can't be prosecuted for things because you have too much money to prosecute. The flaw in the system is that the government who's prosecuting you has a limited amount of money. You don't. You have basically unlimited money. And I'm not talking about the U.S. government. If the U.S. government wants to really put their full thing against you, whatever, like the Justice Department or something like that. But this isn't, this isn't that situation. If it's a crime, even the EPA or even the Justice Department, they have a limited budget. And if you are willing to spend more money than they can afford to allocate to your case, you have a good chance of winning. So that's why, and they know that, and then that's why the IRS doesn't audit rich people. It's not worth it. They're gonna fight you. The IRS rarely bothers to audit people who have large amounts of money because they know they're just going to end up sitting there in court and spending all their budget trying to fight this one. Whereas if they send a notice to an average taxpayer, that person's going to shit their pants and pay whatever it says to get the IRS off their back. Because they're going to hire a lawyer at a regular price who's one guy versus the 3 IRS attorneys who are on the case, and that lawyer is going to say, you better settle because you're going to be screwed. Whereas Trump, you ask him to turn over his taxes, and the entire United States asks him to turn over his taxes. State attorney generals have taken him to court to try to get him to turn over his taxes and things like that. He's just like, screw you. I'm not even going to show them to you. And he gets away with it for, what was it, 4 years now, people asking for his taxes, right? It's a very, very different set of rules when you've got that kind of money. Anyway, so bottom line. So that's why we're long on gasoline, though, because I think that the primary driver here, it's not the overwhelming pressure for gasoline to be lower is not going to go away. But in the meantime, if we move to a longer term chart, the daily chart or the weekly chart, you can see that this is, even with the pressure down on gasoline over time, it's kept it down low, but still somewhere in this range is where it's going to be. And last year we went up and up and up into the summer. And I'm sorry, that was 2018. 2019, I'm sorry, up and up and up into the summer. 2017 up into the spring, and then down and then up. It's not likely that in July we're going to be lower than we started the year with. Even 2015, we had a big crash, up and up and up into the summer, and then down. Summer, down, summer. No, it actually fell before the summer, down. But anyway, it doesn't stay low. At some point, it's going to go up. At some point, it's going to go up. So I'm happy here. I don't know it's going to go back to 150, so I'm happy to start a position here and then see what happens. And if it holds up at 160, fine. I'd probably stop out at 160 and go back in a little bit below. And how the index is doing. So hourly, so 164 now. Indices and the indexes are holding up. So back to here and back to our active trading. So we're down a bit here, but nothing to worry about. And here we're down significantly, 226. But I already have 2 contracts. My contracts are 1646. So if I add one here, 1644, there's no point, right? That's not enough to bother adding. So I'm not going to add one here. If I'm not going to gain a penny, if I can't knock this 0.6 off, or it's really 0.7, I can't be bothered. Therefore, I need to be 1.4 below this number to knock it down. So I've got to be down basically at 63 before it's really worth adding another contract. Because if it's not going to make a significant adjustment, why bother? People talk about averaging down, but they average down too soon. All right, let's see if anybody has a question before we move forward. DXY is $1. No shit. All right. DXY. Nope, doesn't like that either. I don't know what's going on with that thing. TSLA. Weird. Alistair says Americans don't buy or drive cars, especially European-sized cars. They buy trucks because fuel is subsidized. Gasoline in Vancouver is $4 per gallon. Yeah, well, actually, our gas isn't far off $4 a gallon. It's more like, I guess it's 3 plus. I don't know. I buy premium, so it's hard to tell. Because my Porsche says it has to have premium, which I never tested if it doesn't. But so that I believe is more than $3. I'm sadly I don't know how much gas is. Not, I mean, the gas I buy. I think I do believe it's like 320, 340 range. Usually when I get premium. You need the dollars before the symbol? Really? DXY. Oh, that worked. Okay. But that's not the futures. I can't trade that. That's the thing. That's okay, though. I can watch it. Watching it's good. All right. Thanks, Eric. I appreciate that. All right. Anywho. So Americans don't buy cars. I get what you're saying, Alistair. So that's true. And frankly, I mean, look, Al, I remember Al Gore when he was vice president, he wanted to put I think it was a 15 cent, it might have been a nickel. It was like a nickel or 15 cents. The nickel seems so crazy cheap, doesn't it? He wanted to put like a nickel tax or a 15-cent tax on gasoline back when gasoline was like $1 something, like barely over $1. And the Republicans blocked it because they said it would destroy the U.S. economy. And what was the purpose of his tax? Was to create a more fuel efficient system so America could save oil and not buy so much gasoline, which he said in theory would keep the price of gasoline low by just keeping, fuel standards low. So basically there'd be a tax on gasoline. That's still true. And that's still what Europe does. It's not, we don't subsidize the fuel. It's just that we don't tax it the way they do in other countries. The subsidy is obviously allowing all this horrible pollution to take place and destroying the atmosphere and wrecking the world and so on and so forth, and costing U.S. consumers hundreds of billions of dollars in extra fees. But other than that, it's not really a subsidy. It's just that we don't bother taxing it the way that Europe does. We should, obviously. It would force people to drive cars. There is nothing stupider in the world than a U.S. parking lot where literally, I'd say 80% of the cars, 70% of the cars at least are SUVs, and all with one person in them, just who drove from their home. And in Florida, especially, because in Florida, the tallest mountain in Florida is a garbage what do you call it? A garbage dump, one of those big things where they put all the trash for composting. That's the tallest mountain in Florida. Florida is a flat state with absolutely zero topography at all. And there's no need at all to have an SUV. There's land, there's flat land and there's swamps, and SUVs don't get you out of a swamp. A boat gets you out of a swamp. An SUV would sink in a swamp. So there's nothing you're going to do with an SUV in Florida. It's just completely pointless. Yet here I am in Florida with my SUV, of course. But to be fair, I bought it up north. But and I had kids, so we kind of have a semi reason to have the SUV. But so I got my SUV, but everybody else has an SUV too, and it's freaking old ladies getting out of their car to go shopping and buy one bag of groceries and put it in their SUV, and it's just so ridiculous. It is so horrifyingly wasteful. Every single person has a car that is twice the size that it needs to be, and is using twice as much fuel as they need to use to get to where they're going. And it's horrifying. It really is. I mean, they should seriously, like the police should come from Europe and arrest all these people. It's so completely wrong what we do here, with no regard whatsoever for the consequences of what we're doing. Very upsetting. Anyway, sometimes I look around. Also, when I'm on the highway, it's the same thing. Everyone's got an SUV. Everyone's driving by themselves. And they're all going to, we have no public transportation, but everyone is going to the same general place on the same road. Florida only has a few like big roads that go up and down the state, and you could much more easily get in a train or something like that and get to where you're going. But there is a train, but it's almost pointless. The services, I have a train right in my town in Delray Beach. There's a stop for the train, but it's like 45 minutes between trains, or an hour and something between trains. So what's the point? I'm gonna go there. I do have a trolley that takes me there, so I could take the trolley, go to the train station, but then I have to wait. So instead of having a 1 hour and 20-minute trip to Miami, I could have literally the train takes as long, takes probably the same amount of time on the train, but I have all the joy of waiting for the train and paying for the train, which is more than I pay in gas to go back and forth to Miami. It makes no sense. And the worst thing about trains is if I take my kids, I got to pay for them too. If I put my kids in the car, it's the same gas. So the concept of trains for a commuter is destroyed by above ground trains, not subways, but the thing about the above ground trains is they charge so much money and they don't give you a break if you have more than one person. How are they discouraging people from commuting? It's cheaper to go in a car with several people than it is to take a train. I know this from my kids because my kids care about money. And they always tell me that. I say to my daughter, why don't you just take the train? Because we have a train in New York City from where I live. And I said, why don't you take your train? And she's like, she goes, it doesn't work. She goes, we take the train. It costs us $60 back and forth. She goes, it's way cheaper to take the car, even if you have to pay the $15 toll at the bridge. And that's ridiculous. That's just these are bad policies. We have terrible, terrible policies that aren't encouraging any progress at all. So where are we? Okay. So here's that. Oil still heading lower, no helping here. Oh, 160. Oh, no, 164 still. I think we're going to get we're going to get our Dow sell off, and we're waiting for the S&P to come down a bit too. NASDAQ still in la land. Russell might cross this line. That'd be nice for us for the shorts. And oh, that's a good idea. We should look at our portfolio, see how they're doing. Now, I don't think last we did a review was like the middle of, well, obviously this 19th of December when things, and then I went away on the 24th. So I'm not sure how updated these are for new. I don't think there's really an update for new stuff that we've done since I left, which is basically, so figure these are basically not including a lot of the trades that we did, if we did any trades since Christmas, because I haven't had time to get around to it. I'll fix them over the weekend and make sure we caught up on all the entries. But just to overlook them, the earnings portfolio, nothing exciting going on here. It's only up about 1%. I think when we reviewed it, we decided we do like most of these trades. We have an SQQ hedge here that's lost a little money, but not really. I mean, 6,000 up. No, it's actually fine. It's on track. Macy's doing okay. iRobot doing okay. IMAX, no, IMAX still not. Oh, because that Star Wars thing was a miss, so IMAX isn't performing so well yet. H&R Block is brand new, not going anywhere so far. Cliffs is doing okay. Somebody, Schnitzer Steel, had a disappointing report, but it's not hurting Cliff for some reason. And Boeing is doing okay, even though they're not doing okay as a company, but the spread is doing okay because it was fortunately very conservative spread. And HBI, it's weird because I don't think only one losing position, yet we're only up $800. That seems kind of odd, doesn't it? Did we take a big loss in this thing already? I have to check that out. That seems kind of weird on the math. The Butterfly portfolio, that's an old portfolio, but it's up 107%. That's pretty good. It is what it is. I mean, it's a Butterfly portfolio. It's not about whether something's up or down. It's just about whether or not we're hitting the target on our short puts and calls. So for Apple, we're way over on the short calls right now. So we're taking a pretty big loss there. but overall we're up 182, basically 183 here, and we're down 215. So we're down a bit. So on Apple, we're down a bit. The overall position, though, it's funny because you look at this and it's only 32,000 between these two. Or well, 497 minus 311 is about 186, right? Yeah. So 186. So $186,000 spread. It is a what? It's only $180,000 spread. Oh shit. We should take that off the table. 497,550 minus 311,550, $186,000. And we've got 60 of the $30 spreads. Haha. It's 2022 and 2021. So yes, we have 180,000 in the spread, and it seems like it's maxed out, but it's not really, because we can roll the January 270s. Let's watch. Let's see what that looks like. AAPL. So the 2021 270s are $52. Okay. And the 2022 300s are $52. So we can pick up another $30 of upside by doing this roll. That's 30 is 180,000 more dollars. So in other words, although this looks like it's only $180,000 spread, and it looked like that to me until I remembered that it was 2022 and 2021, it's not really, because we can roll those 2021 270s to the 300s of 2022, and that's disregarding if we sell some puts or do something else fancy. And that would, of course, obviously give us another 180,000 of upside. So that's what the problem is. It's tricky in a portfolio because again, this doesn't look as good as it is. And I don't want to say, I don't want to give you the impression it's something it's not, but in other words, it is what it is. That's what's in your portfolio. But the potential of this position is far, far more than it looks. And obviously then it's really worth keeping. So while it looks like it's barely working, it's actually working fantastically well, because these 260s, of course, can be rolled up far higher than 300 over time. In fact, this is $50, right? And we just said that we can roll these to the 300s of 2022. So these can be rolled up without selling any more, without even counting selling more puts. These can be rolled up to the 300s. And then we'd have another $180,000 covering these short calls. We're not going to do that though, because what's actually going to happen? For $10, we sold $10 worth of puts here, the June 240s. When we sell the 2021 puts, and let's see what we sell now. In 2021, we sell another kind of put for $10. So we would sell the 245 puts for $10 when we do this roll. And then we would roll the short calls, which are 50, not to the 280s, but we can put another $10 into it. So we find something that's about $40. So let's say the 290s. So we would roll these short calls so we would sell the 245 puts, take that money, put it into the short calls that are $50, and then roll up to basically these guys, the 290s or the 300s basically. And we'd be in the 300 short calls and the 245 short puts on Apple. And meanwhile, if it keeps going up, we still have, and then of course we would roll the short calls that we have here and go there, and we still have a $360,000 long position on Apple that is half covered by the short 300 puts in 2021. Is there anything wrong with that position? No. In fact, I want those short calls because I want to protect my long position. My long position already has $180,000 in it. So I want to protect that. And no matter how we got there, $180,000 is 1.8 times what we started this portfolio with, just that alone. So of course I want to protect that. So that's what's been happening since we started this position. Don't forget, this portfolio is 2 years old. It started in January 2018. So when we started this portfolio, we had a small little Apple position back then, and we've kept rolling it and moving it and rolling it and moving it, and this is what we ended up with. Now we're into, because we keep expanding our longs without spending more money. You know, we've got 123,000 cash on hand. We've got $200,000 worth of position of total value in the portfolio. We're not spending more money. We're just taking the money that we make and reinvesting it in longer calls and selling some more short positions. So at this point, we have 60 long spreads covered by 30 short calls and 15 short puts. That's how we make all this work. So that's the butterfly. Same thing with Disney. Oh, but the meat of it is that in November, we took 6 months out of the 24 months we had left to sell. We took 6 months and we sold $86,000 worth of premium. At the time, it was $86,000 worth of premium. This went against us so far, but one day it'll come back. And like I said, we can already roll these to the 300s in January. So in the next 6 months, we're going to move this back to premium. It didn't work this time. We didn't get our $86,000. Okay, we didn't get the money that we thought we'd get on this, but it's not much different. It was 72,014. Now it's 75 and 10. No, I'm sorry. That's the profit and losses. I take that back. Now it's 147 and 4. So now it's 151 and it was 80 something. So it's down 70,000 on paper, but we're going to be able to roll that up to the 300 calls. The short 300 calls will sell more puts when these expire. And then we're going to be fine, but then we're going to be exactly the position we started with. It's all that happened is this particular half, this 1/4 of our potential sales, we didn't make the 86,000 we hope we'd make, but we get another crack at it next half. And if that doesn't work, we'll roll it again and do it again. But if we keep rolling up, all that's doing is putting our long spread in the money. And if our long spread's in the money, it's good for $360,000, and we only bought it for $150,000. So it has a $210,000 profit potential on that. And by the way, notice we did all this on 1127 around. So what did we spend to be in the spread? We have 324,000 minus 1,000 minus 14,000 minus 72,000. We only spent $67,000 on this entire spread. And we're talking about making $150-something thousand profit. That's good. And it's not that unconservative. In a portfolio margin account, this is a very low margin spread because you're completely covered by these. So this doesn't really cost you much. These two guys partially offset each other. These guys were out of the money when we took them. Now they're in the money, but they were out of the money when we took them, and they're well covered by this spread. That's all taken into account in portfolio margin. In Disney's case, we sold June puts, we sold April calls. So that's our main position here. It's a little messy, but this is the long position. The long is a 130, 160 spread with the 110 short puts. That's our long position. Against that long position, we sold the 145 calls and the 130 puts. The 145 calls are at the money right now. but everything else is working out perfectly, and look at all the money that's flowing into that position. That is just, well, the puts are old, but basically most of this position is from December here. So we're up $25,000 minus 5 is 20. We're up $20,000 on that long since December, and these guys go back to the previous quarter, and they are up $5,000 or $6,000. And again, this is in well, this is different, but we were able to sell $20,000 worth of premium, even if that was for the whole, even if that was for a half. I'm up 20,000 on my longs, and I'm selling. I'm doing this premium here for April. So we sold 4 months worth of premium here in April. Here we sold a much longer. We sold almost a year worth of premium there. But here's 17,000 we collected on this one for 4 months, 5 months. That's how you make the money. And it's stunning amounts of money. It doesn't seem like much when you do these butterfly portfolios. It seems like, oh my God, that's so boring. But you still make really great money, and it's much steadier. You don't have to worry about the market fluctuating so much. Anyway, I'm not going to go over every position, but that's where we are. So basically, they're all like that. We're just selling lots of premium in between. The dividend portfolio, this is weird. The dividend portfolio is up, wow, 20% now. It's not supposed to be up 20% because the positions here are all 30% positions. They're not supposed to make more than like 17 to 20% per year. And we only started this portfolio in October, late October, and it's already up 20%. That's crazy. This market is crazy. I'm going to be, when I review it, I'm going to go over it very carefully. But these are all solid positions. There's nothing wrong with them. But what's wrong is how weird this is because you're not supposed to make this much money this quickly on stocks that are supposedly this boring. So it's a little, I'm not comfortable with how early we're making this money. It's not going to hurt it though overall. It's just that we can't keep up this pace. It's going to slow down drastically at some point because there's a limit to how much we can make. We capped all these. There's China Telecom. We bought it for $39 and we sold the 37.50 calls. We can't make any money. Not really. We're gonna, we sold the 37.50 calls for $3.30. So therefore, we're getting called away at net 30.8 at 40.80. So we know exactly what we're gonna make. We're gonna make less than $2 on this trade. It looks like it's up more than what it should be, but the fact is we're only going to make $2 on the trade. So this thing has already realized essentially all the money we could possibly, all we can make on this trade is like $1,000, and it's already up about $600. No, 500. So it's already up $500 out of 1,000 possible. But that's over. That's into 2020. That's into June. So these are moving very fast. And so there's a limit to how much we're going to make on these trades. And it's weird to approach it this quickly because it can't go much further than this because it doesn't matter how high it goes, we're still going to make the same amount of money. We're in these for the dividends. We're not in these to make a profit. Oh, I forgot I have to go soon. I gotta go get my daughter. Oh, earnings we already took a look at, right? So we'll look at that. We have more earnings plays coming up now with the season starting again. Hemp Boca portfolio blasted higher. I don't know why. It was doing nothing, and all of a sudden it's moving up. Even though it has IMAX in it, but this IMAX trade is working out okay. Molson Coors came back. I don't know why that one is separate from the other two, but it is. Macy's is a superstar for a change. The MJ ETF is well, this has been elusive for a long time, so that hasn't changed. These are coming in nicely though, finally. And Tenet Health is always a star for us. Whenever we get a chance to get in on it cheap, it is such a fun stock to own. I don't understand why it sells off. It sells off because people start talking about changes in the healthcare law and this and that and everything, and everybody's, oh, Tenet Health, they're Hospital, they're going to lose money. And we get a chance to come in like a 20 and it goes back to 40. It's crazy. But they're another one. It's like Walgreens. It's like people just lose faith in them. And we talked about Walgreens today. I'll leave you with that. But Walgreens, we talked about today. I love them when they're cheap. I love Tenet when they're cheap. I don't care if people sell them off. Look at Tenet. Okay? Happens all the time. It goes from 30 to freaking below 20. It does this all the time, though. It'll do it again. It'll come from here and go back down. I don't care. I'll just keep buying it when it's here and sell it when it's there. So we are probably going to sell Tenet now. It's I mean, that's nicely up. We have to think about that. Oh no, but look how low our position is. So it's a $7,000 position, and currently it's net. No, it's net 6,000. I say get rid of it. We're done. What am I going to wait a year to get another $1,000? That's not worth it. We can make more money than that. That's the thing. We can make more money than that. Making $1,000 in a year, making 20% a year is not a big deal for us. We can do that standing on our head, so there's no sense in tying the money up. Money Talk, speaking of that, here's our Money Talk portfolio, only up 3%, but that started in November, so that's going very slowly. We have gold, which is up nicely. It's up a couple of $1,000, and we have IBM. Oh, I guess, yeah, I could see, because SunPower hasn't moved much, and IBM is pretty flat, and gold is doing good. So that's it. We only have a few positions. We got to work on that when I get back on the show. Now, short-term portfolio, dun, 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 dun. Ooh, big step back. Why? Oh, Tesla, because we have Tesla. Look at how we're getting killed on that. Oh, that's so ugly. Okay. That's well deserved. That's our own fault. We got burned on Tesla short calls, and we're gonna have to fix it. But again, it's not a loss. It's only a paper loss. We can fix this by rolling it, and we will. So that'll be fun to watch over time. Unfortunately, though, for now, it's taking $20,000 off what was a very good performing portfolio. Not the 42% in a few months is bad, but we'll live with it. Chipotle's doing okay. That one's all right. FCX doing well. MJ also still, not counting the original losses, doing much better now. Philip Morris doing very well. SQQ, the hedge is a lose. Well, 7, no, about even. So the hedge isn't so bad. TD Bank, good for a new trade. TLT, very good. Wow. TLT is very nice, right on track for what we expected. Oh yeah, it's going to close soon. So this is going to close soon. It's right on target for what we expected. Toll Brothers doing okay, but not great. Tesla killing us. And Vail, I don't remember taking Vail. I don't remember that trade. But it's doing okay too. So I don't know. Winner is basically the theme of that portfolio. So, well, first of all, yeah, if all your trades are winners, you're not going to have a bad portfolio. The question is how much of a winner, and that's our problem. I mean, it's easy for us to pick winners. Our winning percentage is gigantic. But the question is how much of a winner. And also, I will say this, though, when we lose, okay, we can take very large losses. Something like this Tesla position can really blow us up. So, I'd say for one thing, stay away from those kind of. If you have a smaller portfolio, and you don't like that kind of stuff, don't do these trades because they are much more volatile. I think they're fun, and over time, I don't mind working on them. But if that's a bother to you, or if you don't have plenty of margin in your portfolio, just don't get into those kind of trades. As you can see, the other kinds of trades do fantastic. If it wasn't for that, this whole portfolio would be up $20,000 more. So, so although down the road, I think we're going to make that, this negative 53, we're going to make, so we're down 20, let's say, and this is saying down 70 overall. I think that we can pull this whole 70 out. I think we're going to end up making all that money. I mean, first of all, you can't lose both sides of this anyway. That's the funny thing about the portfolios too. It's like you have to understand the mechanics of your trade. Is it going to be possible for me to lose on the short puts and lose on the short calls? No, of course not. You can't lose both. So therefore, my loss, which is currently showing me $67,000 of loss, it cannot be 67,000. This, it's a net of these two. So it's really net 40. So $27,000 of the loss that is showing right now on my portfolio is not realistic. And that's a 50% more of the portfolio profit there, or more than 50% more of the portfolio profit. Actually, it's 27% more because it's a $100,000 portfolio. So this portfolio, if these two had no premium in them, would be about double where it is right now. And again, not to excuse it, and the reality is your broker says if you shut this thing down today, that's where you're going to be, of course, obviously. But we're not shutting it down today. We have no intention of shutting it down today. We're going to play it out, and we have strategies to make the chances of us turning this into a -0 are very good, even though Tesla went flying higher. We did this roll on 12/20, and oh, that's not Tesla. TSLA. On 12/20, Tesla was under 400. Now it's 500. It went up $100 freaking in a month. Not even a month, in a couple of weeks. I think it's bullshit. I'm not very inclined to do much with it. I don't want to spend any. I'm certainly not going to spend any money to change the position. But what we will do, what do? We have the short 400 March calls. So what do we do when we think it's going to go down? TSLA. So we have 5 short March 300 calls. Where is March? Not 300, 400 calls. So here's the 400 calls. They are what? What? Tesla, March, 400 calls. 107.80. Oh, I bet that's 2021. 21, that's why. Knew something was wrong. I'm like, wow, could not possibly have changed that much. Hello, where's the little stick? There we go, okay. So the 400 calls, 107. So what can we do? I don't want to sell the March puts. I guess we'll sell some more. There's only 5. So we could sell 5 more, 5 300. We could sell 5 more 250 puts for $30. Okay. And we can take that $30 and we can roll these calls. So what do we say, 107? So let's say we go to July. And now 107 minus 30 is like 75. So right about here, we can roll these up. So understand the mechanics. We have 5 short March 400 calls. We can sell some 250 puts for $30. Apply that $30 to the 107, obviously, and then we have to roll $77. I don't want to do this. Well, 480 doesn't matter. 480. We can roll to the 480 July short calls. So we're rolling up $80 in 1 quarter basically, and now at some point we might want to add some long protection or do something else. But right now that would be the next move to make. It's just to add a few more short puts and roll the calls to a higher strike. So eventually, if it ever goes down, we're going to make all that money back. The entire $50,000 we'll make back in one shot and skyrocket the portfolio to a ridiculous number. If it doesn't, we're going to have to roll it again, and then we'll have to roll it again. And if we roll it up to $100 every quarter, eventually Tesla's got to get to like $1,000 before we're really going to lose. And don't forget, we're selling short puts against it. So obviously, if it keeps going up, the short puts keep losing money, and then we can afford to sell more short puts again. Because we originally sold these short puts for We sold the 250 puts originally for $50, and they're already down to like $27. All right. So, and by the way, we could also buy back these 5, right? So we buy back those 5 and take our $12,000 profit off the table. And then, since Tesla is now massively higher than it was, we could instead sell, not the March, we could then sell the 300 puts for 40 something, or we could sell the 350 puts for $60. There you go. Because we already, don't forget, the short calls are already drastically in the money. We're not going to cry if Tesla comes down $100 and these short puts come up in price, because we're going to make massive sums of money on the other short calls. And eventually all we have to do is then roll these down lower. And as long as Tesla doesn't go bankrupt, we'll be okay. Or we could stop out a couple or whatever. There's a lot of ways to fix it. So, probably rather than take on margin, I'd be more inclined to do that, because we can take these 250s that are $30 and turn them into 350s that are $60. So basically double the amount of cash we get for the same amount of calls. And the margin isn't going to change. Well, it'll change a little bit, but since Tesla's up $100, it's not going to change much. And 350 is still low enough where I don't feel too uncomfortable. And that's it. And then the only way that these things become a problem, because the delta, well, it doesn't say the delta here, but, well, you can tell the delta. Let's say Tesla drops $50, then these calls are going to be priced more like the 400s, which is 75. So we would lose, if these are 64 and the 400s are 80. So let's say that's $15. So it's 5. It's only $7,500. $15 times 500 is 7,500. Yes, that's correct. So that's all we're going to lose is $7,500. Meanwhile, the short calls would drastically change, because they'd be there, because we're going to roll them. Don't forget, we're only doing this for the roll. So the March, not the March, sorry, the July. What do we say we're going to roll into? The 480s? The July 480s at basically $80 would drop to the price of the 430s. No, I'm sorry, not the 430s. Go the other way. What's $50 more than the 530s? The 530s at 56. So these things would gain $25. And that would be our profits, and then we'd make the extra $10,000. That's how you manage that without overdoing the margin. You just reposition and readjust your targets and try to find a mix where you're going to actually hit your target. And if you find the mix and hit your target, bingo, you win the whole thing. If it ever comes in between the two strikes that we have, we win. Meanwhile, we just move them, adjust them, to hit the range. It's like you fired an arrow and you get to run up there and take the target and move it to find where the arrow is going. We don't have to be right on our first guess. We can adjust the target anytime we want to. All right, so don't despair when these things go against you. Just think about, how can I rearrange my trade so that it's centered on where Tesla's going next, where we think it is going to be. I certainly don't think it's going to end up being $1,000. Therefore, I don't think I'm going to lose on this trade. Ultimately, in between, sure, in between you can have a lot of pain in your portfolio because it looks very bad. But it's so much of it is premium in the pricing, or especially after we roll it, it becomes all premium again, that you've got a huge margin for success. It's just you have to give it the chance to get there. Obviously, this particular spike up on this great news out of China and so on and so forth, it's like, so what? They opened a factory in China. Nike opens factories in China all the time. It doesn't double the value of their stock. Are those does Nike open a successful factory in China? Of course they do. They open a factory in China to sell sneakers. People buy sneakers. That's how it works. Otherwise, why'd you build a factory? So this whole Tesla fever is just really insane. But they've got earnings in like about the 20th of the month. They're going to announce earnings, so we'll see what happens. All right. Anywho, I have to wind this down. Go get my child. Jed says check out SKT. Ooh, that's something I can't really ignore. Rick says don't forget about Maddie. Yeah, that is right. I better not forget about my daughter at the Air Force. She'd be quite ticked off at me. And it's the first time coming back from college to visit me. No, I'm sorry, from her new college. Anyway, all right. So where are we? SKT. That's what you said. Ooh, look at them. That's one of my favorites, SKT. That's I hope that's in our dividend portfolio. If it's not, I don't understand. I don't know what the hell I was doing. Oh yeah, of course they are. This is my absolutely favorite stock. This is almost our stock of the year, except I lost faith. Tanger, I guess it is. I would say Tangier, but it's not really Tangier because missing the I. Tanger Factory Outlet. So they're a REIT that owns shopping malls, but they're nice outdoor and they're not really like outlet malls, but they're kind of like outlet malls. Like they have some outlet stores, but also regular stores, like a mix. But what I always like about Tanger Factory Outlets is that they're very into their communities. Like they try to be like a center for community events. And obviously that would be cheesy in a big city, but they're not in big cities. They're in small cities where the mall is like a place that, like you all know this is like plenty of places. Like the mall is where everyone hangs out, all the kids go, people go all the time. They'll go for lunch and things like that. They try to be that kind of place. They try to have more, they'll like have a skating rink and have community events, and they have big Halloween parties, and they have entertainers come on the weekend. They try to be like a real gathering place to keep people like coming there all the time. And they mix in the food with the other, not restaurants. So they don't do restaurants. They only do like fast food. But they mix in food places with all the stores, and they make sure that there's a good mix. And they don't have any big box stores at all. And they also keep their profile so that they're incredibly spread out. And it's all very well thought out. It's like they do everything right that I think you should do in a REIT. They don't have anybody they depend on. They don't have any single customer that makes up a huge amount of their business. They won't let you. It's like if you're not TJ Maxx, they're big. If you're a GameStop, let's say, and you've got and you're taking up more than 10% of their spaces, they'll say, I'm sorry, we don't really want anybody else. And I think, frankly, I don't think they have a tenant that's more than 5% of their total, because they don't want to be in a situation where if one of their tenants go bust, it really impacts their business. So they don't take on too many tenants of the same kind. They don't take on too many of the same tenant. They spread things out. They're very, very intelligent with the way they go. Yet, because they're in the REIT business, people have been beating them up. But this is a great company. And it's still cheap. Even if you miss the bus at 15, it is still cheap. We've been buying and buying and buying these guys. Every time they're low, we buy them. So today's a good day for them, and I guess that's nice. But it's nothing surprising at all because they were so undervalued down here. I've been banging the table on them for ages. In fact, I'm sure that was a top trade. I don't have time for this, but I'll show you. I think it'd be very hard to go through my top trade alerts without finding them. Just like Macy's. Macy's is another one I bang the table on constantly. Oh, look, see, Macy's again. So there's Chipotle, Vail. There's Vail. It was a top trade. See, and I don't remember it. It's funny. Limited Brands, still another one, still a bargain. That's Victoria's Secret. Molson Coors, woo, coming up nicely. Macy's again. China Mobile, great call. Wow, I ain't good at this. No, wasn't there. Philip Morris. Look at these top trades. Wow. Our entire dividend I was right. That's funny. I put our entire dividend portfolio up as a top trade, and it turns out that's doing incredibly well. iRobot, interesting. Still cheap. MJ ETF, I still keep liking that one. Coffee Futures, that came up nicely. Lebu, still down. Oh, I'm wrong. Isn't that funny how I'm wrong about this? Texan, MDR, sugar and oil. That was a great call at the time. This is going back a long way now. This is going back to September. Well, I take it back. I guess I got tired of mentioning SKT. I really thought I had. There's TCN was not Tilray. Shoot, what's the name of these guys? True Leaf Cannabis. That's a good cannabis company. Well, I can't believe it. In my mind, I've been mentioning it more often. I guess I do it mostly in chat. There it is. All right, so the last time was August. Sorry about that. I mention it in chat all the time. I can't believe I haven't made a top trade of it since then. So where were they in August? Let's see. Here, it's a good one though. I mean, if you find this top trade from August, I think I got really into it. Oh yeah, I did. See, here's I did their PowerPoint and everything else like that. So it was August, August 1st. So on August 1st, they were right where they are now. They were at $16. And I talked about all this stuff. These are slides from their earnings presentation at the time. Wow, this is very, very in-depth. And then we had a couple of trades that we put in for the LTP and the OOP at the time. So I love these guys, though. I mean, this is for all these reasons. Oh, it was 1537 at the time. That's not bad. So it's 1537 then, and now they're coming up around 16 whatever. That's not it. So 1537, that's where we came in. August. Oh, I see. Oh, because it was down here. On August 1st, it spiked down. That's why I put out the top trade then, because I thought that was really great. Then it went lower, and people were like, well, you're crazy. And I was like, no, stay with it. But anyway, so this is where you want to be on the price on this thing. It's a great, great company, great stock, good long-term value, and they pay a big dividend. So there's like a million good reasons to be with these guys. All right, I got to run. It's been fun. We will do it again next week as far as I know. Oh, maybe not. I might have to be in Orlando for this thing. I'm supposed to, this company we're working with wants us to go, and PSW Investments wants us to go and look over their operation. They have a marijuana growing dispensary up there, and they're looking to do something with PSW Investments. So I told them we'd go take a look and talk about possible partnerships, because we have, of course, our hemp company, Hemp Boca, and our marijuana company, New Age. And we're very into like setting up partnerships and doing synergistic things. So it's possible next Wednesday I won't be here at all. We'll find out then though. If we do, I'll probably reschedule the webinar, not just cancel it. All right. So thanks everybody for coming. I appreciate it. And we'll see you guys next week, or yeah, some point next week. Anyway, maybe not on Wednesday though. All right. Take care.